Ladies and gentlemen of the crypto space, we're live at 11:40 a.m. on a Thursday, May 27th, almost the end of the week. Markets look pretty interesting. I don't see instability like we did last week. What I'm seeing is depreciated price action that looks healthy. Things go down, things go up, things form patterns. This is very much rational market action, and it's quite refreshing to see. It's not the exorbitant candles to the upside triggered by massive short liquidation or massive candles to the downside with longs getting liquidated. This is something that is navigable. Navigable. I like this type of market action. It's not irrational, and it allows us to really focus on contrarian ideology in the way that I really like to look at markets with longevity, long time horizon, and not from a trading perspective. I don't like to necessarily rebalance the portfolio if there's a significant trend violation. And that's something I want to really strongly focus on going forward is not even over trading, just actually trading significantly less. I don't want to readjust the balance sheet. This is exactly the positions that I want, and I think the market looks reasonable. Clearly, there's no such thing as certainty. We could have a reasonable depreciation. I don't think it's going to be anything near what happened last week. That was an event. That was a white swan event, as Bully Woo talks about. That was something that was triggered by a massive, massive pileup of longs getting liquidated, and people had to sell to cover. Um, and it was a brush fire. As I said on Twitter, maybe earlier today or yesterday evening, the brush fire cleared the garbage and metaphorically allows for regrowth of relatively healthy market conditions. Anyway, let's get the stream going. The balance sheet, the business, the employees, the ultimate contrarian ideology that Kevin O'Leary is talking about and I've been talking about for the last year and a half. And that's the way I like to look at these markets. I find that concept tantalizing because everyone wants to be a business owner. And this is the ultimate business because you're dealing with just capital. This is a capital business. Anyway, let's hit the stream. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. But let's pop it over to the main screen and see who's in the stream. Candice in the house first. One like we can do better. Yes, my friend. Anarcho, all in Doge. I can't. I wish I had some CGI where my head explodes. Barry DGB in the house. Winner in trading. Extremely bullish on this channel. Messi shouted it out yesterday on the HXRO channel. Really? I like them. You know what's interesting? They're old school. There's a lot of old school folks in this space that they've been through thick and thin, and they got tough skin. And it's impressive what folks have been through, and we all present a very different picture. It's a combination of our personality and our opinions of the market. And he's got great content. He's just quite entertaining and enjoyable. And I'm sure he's a decent guy, family man. And there's a lot of very, very interesting, reasonable people in this space that have good intentions. And there's obviously the malicious folks, which we need to avoid. Focus on the people that have good intentions, that are honest and transparent. And this is a great community. Obviously, we have our own little community that we've started with Discord. We got a little family going on. But there's a lot of these communities out there that are quite reasonable, and and just to avoid the craziness, and just stick to the plan, stick to firm rational ideology. And the number one thing really is be different. Look at markets differently because we know the masses don't succeed. The masses don't win, and that's a true statement. It's unfortunate, and from an empathy standpoint, it's upsetting. But the extent of what I can do is exactly the content that I provide to help people look at the markets differently. Anyway, Cruz, I've got Maker debt, Ethereum, I'm putting it to work on Curve. I'm thinking about migrating it all to Polygon to do the same with Aave, but a bit nervous concentrating on my. So I'm about 80-90% capital on Polygon at this point. $7 billion worth of capital on Polygon Aave. Sergey himself said he thinks that the amount of capital on Aave Polygon will exceed that of V2 on Ethereum. This whole game is about nerves and anxiety. I mean, look at this right now. So right now I'm sitting here, nerves and anxiety, $2.06 to almost $2.07, below the 50 SMA on the 30 men. I'm sorry, that's the 100 SMA and the 30 men. It's below the 50 SMA up there. We're below trend. It's an inverse head and shoulders setup. The below trend, sure, it could break down. If it breaks down, this is Matic, of course, everyone, which I have my largest position in. We're very nicely high on the guppies on the 1 hour. But if it breaks down, where's that next resistance? Oh, that's why it's holding there. How do you like them apples? That's why it's holding there. There's the 200 EMA. This is that's quite reassuring for an inverse head and shoulder setup. Falling through the 200 SMA, bouncing off the 200 EMA. It's not a perfectly symmetrical inverse head and shoulder setup, but is one ever. But if this holds here and starts to push up, that is a beautiful inverse head and shoulders setup, which is very much indicative of a bullish continuation. So, in fact, based on this, I'm going to be looking at the 15 min. I want to see a push back above the 200 SMA, which will coincide with the 100 SMA and the 30 min. And those are the two long-term moving averages of significance at this point. Below the 200 SMA is disconcerting, no doubt. The heading towards a potential invalidation of the inverse head and shoulders pattern. But all we do is look at data, and we make decisions accordingly. A breakdown of the 200 EMA might indicate reason to move a little bit of capital from Matic over to, let's say, something that's outperforming, which is why I have Aave, Ethereum, and Bitcoin charts. So Ethereum is under significant moving averages. Aave looks decent, but if you go over to the 1 hour, I'm pretty sure it's under those moving. It's above the 200 EMA on the 1 hour as well. But look at that. It's smack flush in the guppies, which is basically like in the weeds, like you just ran into the brush, a cornfield or something. And this is just like complexity and congestion, as a lot of folks would talk about a region like that. So this is probably a situation where I just sit back, relax, and let things play out. The positions are solid. I've thought through the balance. Other folks are heavier into, for instance, Matic, folks that are on the Discord channel. Right now, it's about 40%, 30%, 20%, 10%. Go figure. 40% Matic, 30% Ethereum, 20% Bitcoin, 10% Aave is the balance that I've deployed, and about 27% cash that's working. And that's where I'm at. Let me handle a couple of comments, and I'll talk about the balance sheet and cash and how to think about this stuff and putting your capital to work. So I digress from your. So, Cruz, you mentioned debt from Maker. I love MakerDAO. I can't wait for them to be available on Polygon or Arbitrarium or wherever I could effectively execute my business strategy. Those are fixed loans, and even if it's hot on Arbitrum, even if Arbitrum's hot, there's going to be synergy between these platforms. Look at it pushing above the 200 SMA. That's nice to see. And I don't think there's going to be significant capital outflow. I think there's just going to be massive capital inflow to both Ethereum as well as Polygon, as well as any other network that has critical mass monetary velocity, because that's just going to suck in capital. It's going to draw in capital, and that's just the way the psychology of humans work. That's the way the monetary systems have functioned throughout all of societal history. When there's cash flow, when there's money creation, which is what lending and borrowing does, it creates money as per double entry accounting. Um, that psychologically expresses opportunity and causes people to react accordingly. This holding right here on the 200 EMA, this is so incredible right now. If this pushes back in the trend, pushes back above the 50 SMAs right here in the 15 min, and this is the 100 SMA. This pushes back above the 100 SMA. Big Daddy's going to get up and do a happy dance. Woo! Dirty Sanchez, howdy. RMS. Hi, Noah. What's up, guys? What's up, Crypto Fam? Squatchy's in the house. Paul, is slippage a problem on Matic, or is there enough liquidity for decent sized trades? I've thrown around a couple $100,000 in trades. It's not horrible. I mean, at worst, you'll get 1, 2, 3% depending on a hot period of volume. But yesterday, I did like 80 grand worth of something into. I sold like I think I did 80 grand with a Matic from here, and I was able to rebuy down here. I pocketed like 8,000 Matic. That was a nice little pickup. Didn't exit the position. I rebalanced accordingly and took a little bit of capital and flipped it. So I don't often do that, but it was a breach of the 100 SMA to the downside, and I figured it hit the next moving average. And there's risk in that play. What if it wicks down? Like, look, this is wicking down between the 200 SMA and it's bouncing back up. So, and then there's not much price action to the downside. So you could always miss out to the upside. It's very complicated, and there's no guarantees when you liquidate. If you could rebuy lower, or if you sell, or the vice versa is my point. Anyway, but point being, fair amount of capital yesterday. I literally had no slippage between Matic and Ethereum. It was zero slippage, which is fascinating. Equal dollar quantity transaction on Oneinch. So there's great liquidity going on, and it's getting better and better. Zachary, you're very welcome. This was I obviously am in the crypto space, Zachary. So we throw around capital around here, and I've been blessed to have a lot of experience with these markets, and they're quite lucrative. And this entire stream, Zachary, is talking about business enterprise that's completely digital. It's literally capital business, and it's the same business that exists in the legacy financial system that Wall Street executes on. Financial services, market makers, people down on the floor on Wall Street. It's the same exact business. But now, what has happened with the crypto space, what has happened with the DeFi space, is now anyone could do it. I no longer have to have a license to work on the floor of Wall Street. I don't have to have a corporation to manage capital. I could use my capital in decentralized DeFi protocols and do the exact same businesses that billion-dollar companies historically did down on the floor of Wall Street, being a market maker. And that's extraordinary. So I was blessed enough to have had experienced capital gains over the last couple of years, and I treated a kid to a wonderful summer at camp, and that's a blessing. I remember my days at camp, and I have my two kids at home, and I hope they have a wonderful summer as well, filled with experience and education. And while I sit here slaving away working so these little rugrats can have a good life, I want them to have a good life. That's all that matters most for me with my daughters, my lovely little angels. And if I can make someone else happy for a summer, that's just a wonderful, wonderful thing. So it's a pleasure, Zachary. Yo, shout out from Messiah, Crypto Messiah. I like those guys. It's a good guy. I think we'd have fun talking. I'm a talker, if you guys don't know. Mark, question of stability of stablecoins, risk of losing peg. Yeah, stick to the big boys and don't. I have no interest in risk or rather, I have no interest in unnecessary risk. So USDC, DAI, USDC, USDT. I mean, what else do you need? DAI is probably the most interesting. DAI handled 2020 March well. DAI handled last Wednesday. DAI is basically the same thing as Tether. Tether does it as a corporation. DAI does it programmatically with digital assets. It's the same exact business model. And guess what? Both of them are the same exact business model as Eurodollars. So the European Union and Eurodollar system, which is a couple of quadrillion dollars, or I don't know. We have to look for Jeff Snyder. He understands the Eurodollar market's the best of anyone, how big it is. But that's exactly what they do. So it's the same thing. There's nothing outlandish about it. Yeah, you can have corporate complexity aside and the whole drama aside with how Tether operated their business, but the business model is identical to status quo or already existing functional systems. Squatchy's in the house. What did you say? I got to scroll back up. Noah, how do you think will Arbitrum change the current DeFi ecosystem? Yeah, this is something we'll know more tomorrow. But initially, I'm inclined to think it's going to be synergistic. I don't think we're going to have systemic disruption. We're going to have a large capital outflow from Polygon. Polygon's powerful, and you got to remember, network effect is significant. So why would capital stop flowing into it when there's a new system that still needs to be tested? There's only going to be a couple of protocols on it. By the time the protocols spin up and have critical mass capital flow, Polygon's going to have $10 billion dollars on Aave. So there's no the real disrupting of the status quo, but I see what more so emerging as a blending and a synergistic relationship between these layer two platforms, especially as we have cross-chain and cross-protocol interop solutions deployed. I mean, Ren's deploying on RenVM's deploying on Polygon. That means capital flow is going to be relatively seamless. What will end up happening is cross-network liquidity providers. Isn't that obvious? I mean, what do we need bridges for when we have cross-network liquidity providers where you literally buy and sell and it doesn't matter what network it comes from? That's the future. It's not necessarily going to be from Uniswap, and it might be from a smaller protocol to start, because there's a bunch of them talking about it. Was a DFYN is talking about cross-network liquidity, but I don't see any reason why that technologically or conceptually is outlandish in any regard. And dare I say, cross-network single-sided liquidity? Come on, Bancorp, baby. That's the business model right there. If I could deploy my assets, my chosen balance sheet to Aave to rehypothecate the over collateralized debtors to draw an income from the principal, and I could leverage cash and add cash to the balance sheet and deploy that in single sided LP type positions, cross network liquidity, the monetary flow, the velocity is going to be extraordinary. And then there's no risk or minimize risk to your debt position. So you have your principal generating capital, you have your debt generating income. It's just a win across the board and a business model that, as we said, is completely comparable to status quo business enterprise or historic business enterprise. Extraordinary what we could do now. Anarco started buying BTC and LTC in 2013, 2014. Nobody held from back then. Because if someone held from 2013, 2014, they got 10,000 Bitcoin sitting around somewhere. And that means they're definitely not on my stream. That means they're probably on a private island somewhere right about now. But I appreciate it. I was probably in about 2015, 2016, give or take, something around that. So gotta hand it to the old school folks from 2013, 14. Those are the golden days. Can you explain the difference between liquidity mining and yield farming? So liquidity mining and yield farming are analogous in many regards. What's most pertinent is there's two sources of revenue. There's base APY, which comes from transaction fees. You're providing liquidity to a market maker, and as the transactions occur, you're getting a portion of the transaction fees. And that's stable, predictable, and will grow over time. Um, what is the other source of revenue is incentive systems, which are derived from monetary policy. So, yes, you could argue that it's out of thin air, but you could also argue that these are novel fiat systems that have inflationary pressures, deflationary pressures, and anecdotally observable monetary velocity, where you could collateralize them for debt positions. So, very powerful. These monetary protocols that have been created, arguably Curve is the most successful monetary policy that has been created in the DeFi space. So that's the distinction: base APY versus incentive systems. Lewis, you got my attention today via Twitter regarding Flare Networks. I'm assuming we cannot, unless we are airdrop. Flare Networks, from a value allocation standpoint, is off the radar right now. It doesn't exist. It's not launched. Look, we got Phantom that has still waiting on critical mass monetary velocity, and it's a couple $1 billion asset. What I'm interested in Flare is it's cool, it's powerful, and it's just one of the awesome systems that are going to come online and provide us with a suite of tools to deploy our business. And as cross-chain interop solutions become completely seamless, where Ren is behind the scenes and Bank or Uniswap, Oneinch, and they just execute them, and it's cross-chain liquidity providers and market makers, then that's how this is all heading. You're not going to know what network you're operating on, and that's what I wrote about. I wrote on Twitter that a couple weeks ago. At some point, you could be on Polygon and you could be providing liquidity between Ethereum and Polygon, or Ethereum and Arbitrum, or Polygon and Arbitrum. That's just the way it's going to be. You're not going to need to know what network it is. You could operate on any network and be deploying capital that's consumed on any network. Incredible. So Flare's on the radar. There's no opportunity. There's no opportunity. There's nothing to buy at all. And I don't gamble. I don't take risks. There's nothing to speculate on, in my opinion. You wait for critical mass liquidity. Drives the developer FOMO. The developers make the apps drive the users, and you combine that and you create monetary velocity emerges. Once there's monetary velocity, then that's going to draw in the capital, and you're going to have exactly what happened on Binance Smart Chain, and you're going to have exactly what's happening on Polygon with $7+ billion in capitalization on Aave, in liquidity, in free cash liquidity. So that's the deal. We've seen it twice now. Now you know the signals, the signs, and it's obvious at this point, proven empirically twice, what to look for to find the next network with monetary velocity. Hey, Noah, finally able to watch you live. Hey, Paul, it's a pleasure. Damo, hey, Noah, sorry I joined a bit late. It's all good. These bad boys are recorded. I got like 300 streams at this point. Fergus, surely people are selling Matic because Arbitrum comes out tomorrow. Yeah, not necessarily, my friend. I don't know. We'll know more tomorrow, but I think there's going to be good synergy going on. Cruz, sorry, no, I meant in regards to network security, Polygon, and not price action. Do you see any counterparty risk holding high percent of assets on Polygon? For myself, I do not. I do not. Candid, XSushi is the way to go. XSushi is a big deal. XSushi has a decent monetary policy. I think other things are outperforming, and you could argue that sushi's underperforming. But that also means to me, I don't allocate value to underperformers. I allocate value to what's outperforming. And if sushi starts outperforming, great, allocate value. So I don't necessarily buy the dips. I'm not the guy who buys the thing that is underperforming. Value flows from the underperforming assets to the outperforming assets, because the outperforming assets are outperforming. They're going to keep going up. You don't want to buy something that's underperforming and goes down or maybe bounces up. You want to wait for the confirmed breakout. You want to wait for the confluence suggesting something is going to keep going up. And that's why you allocate to something that is outperforming. And that's how you grow capital, and that's how you grow your wealth. Know what software service is used to track your DeFi coin transactions? Zapperfy. Zapperfy is really all you need. It does everything. Between that and Delta, I'm able to track everything I need to know. Demir's in the house. Always a pleasure. DGB narrative change. Ren DGB now on Polygon. Partially. Well, that facilitates the liquidification process. When we need a significant critical mass liquidity. Once we have $100 million worth of Digibyte on Aave, and then we see $50 million of it borrowed, then means people are accessing Digibyte equity. That means Digibyte supply has been disrupted, and that means the price is going to go up because you have the supply disruption. And then that's the way monetary velocity drives principal appreciation. Ooh, red guppies on the 15 men. Come on, baby, hold that 200 EMA. So I don't think we have critical mass for Digibyte. I think it'd be a wonderful collateral asset. It contains a very large amount of equity, and I'd like to see its equity being put to work. I will acquire assets that I can uh, that are equities. These assets are more of an equity than equities. When I say equities, I'm referring to like the traditional stock market, securities. They call them equities, but you can't access the equity. Can I collateralize stocks and bonds necessarily as a general public? If I go on Fidelity and say I want to borrow this, this, and this, it's just an absolutely frictionful process, filled with friction for the average retail participant. But in the DeFi space, I could borrow $500,000 in 2 clicks in 5 seconds. Incredible. Had great slippage too. Was better than Oneinch yesterday. Yeah, slippage is a pain in the neck. You got to be careful. Zachary, well, good dad Noah. Super cool. You are treating those Pop Tarts to camp. I makes me happy. I hope they have smiles, and I hope for the best. That's all I could ever hope for children and kids and adolescents. And I remember my trials and tribulations as a child and a teenager and a young adult. And I hope folks can have good experiences. That's all it's about, my friend. Dirty Sanchez, do you have recommendations for further content regarding DeFi portfolio strategy? Uh, Not really. I mean, you're talking. The only two people I ever recommend are Bankless HQ and DeFi Dad, but I'm the only person that really talks about this content the way I do, in my opinion. Strategy. Not really. It's hard to find quality content, in my opinion. If I found quality content, I probably wouldn't be doing this stream for the last year and a half. Probably just listen to some other guy doing exactly what I'm talking about. Mark, cheers, man. It's a pleasure. Live W, I love DFY, and yeah, my eyes are on it, so I wait. Like I'm not even on QuickSwap. I don't hold capital there. Just predominantly Aave and Curve, which are tried and tested platforms, and DFYN. The yield is extraordinary, but I'm not going to throw capital there. It's just not something that I feel comfortable with. In the end of the day, you need to feel comfortable where you're allocating capital. You need to be able to sleep at night. They will do well this year, I feel. I like the sentiment, speculative, and there's risk involved with that speculative sentiment, which is fine. And the risk is required to maintain and grow wealth. Because if you keep capital in a bank, it's not risk, it's a guaranteed loss of money. Every single year, money in a bank account will lose guaranteed 15%. Incredible. So I will take a risk any day to avoid a guaranteed loss of capital. And the best part is I can manage that risk. So that's what we talk about here. Risk management, boys and girls. Hey, Noah, have you checked out the Oneinch Wallet directly to Fiat Ramp? Yeah, I don't need it. I have my old school. I've been doing this for a long time. Strategy and approach for Fiat on ramp and off ramp. It's probably okay. I like the Oneinch team, and I think they've done great things. Renbridge to Polygon, bullish. That's right, Labra. You know, I like my Ren VMs. Are you still staying in Ren? As you said, you don't need bridges in the future when you have cross-chain transactions. What facilitates that cross-chain interrupt? Ren VM is what facilitates that cross-chain interrupt. Hey Noah, you're the man. Hope you are well. How do you think Polygon will hold up once L2 solutions come online across the board synergistically, my friend? Dr. T, exhausted. I know the feeling, Dr. T. I'm going to jump off the call. I'm probably going to rebalance a little bit if this 200 DMA doesn't hold. 5%, 10%. Nothing big. But this is looking a little bit weak here right now. I'm exhausted as well, my friend. I need to hire an employee to help manage the balance sheet, the business, and the employees. And that's what we're talking about here, boys and girls. Every asset in the portfolio should be working, needs to be working. And if it's not working, it's missing out on what the evolution and revolution of what DeFi is. It's self-sovereign, disintermediated monetary services. It's what the big banks used to do for all the years, and now we could literally do it at home with a couple of clicks of a button. Put your capital to work. What's the point of getting 0.02% in a bank account when you could earn easily 6% on cash, and with a little bit of experience, you could earn 15 to 30% pretty easily in a relatively risk minimized way. So all that means is you go to work every day, save your cash, and you can earn 15 to 30%. And at some point, then your cash is making enough money so you don't have to work. Everything changes, and I'm exhausted, Dr. T. Anyway, let's wrap up the stream. Discord is great. I love hanging out there. Friends and family at this point. Heck of an experience. How can it not be friends and family after an experience like this? After an experience like last Wednesday, and we have that together. So that Discord forum is absolutely a wonderful place to hang out and share ideas. And I mean, where else can we talk about the things that we talk about? No one else is going to understand us. No one in the general public, most friends and family, would not understand a thing about what we talk about and the experiences that we have, whether it's good experiences or bad experiences. Nobody's going to understand. They're going to just say we're gambling, and it's just not even remotely, not even remotely that. We're managing capital, and we're managing capital just like banks. Be the bank. We can be the bank, and that's literally what we're doing. We're banking, except we're not the bankee, we're the banker. And that's what's extraordinary right about now. Anyway, 12:11 p.m. on a Thursday, May 27th. 56 people in the stream and 29 likes. We can do better. As always, I thank everyone for joining. Tell everyone to subscribe, and I will see you all tomorrow on a Friday. Peace.